Good morning, students. We shall be starting in some time. Till then, you can watch the YouTube video of the introduction and work of the speaker. The video link is shared in the chat box. We shall be starting in some time. Thank you.
Milind sir. Sir, IR ma'am is joined in. Can you please check? I'm not able to see.
Yes, I will check. I will check. Ma'am is there.
So you can make her the co-host.
Good morning, Kaizan.
Good morning, ma'am. Good morning.
Good morning, Milind.
Good morning, ma'am.
Yeah, I'm ready. You can tell me whenever you're ready to start.
Milind sir, YouTube पे बच्चे हैं ना?
Here, ma'am, you are host. Lakshmi, ma'am.
Milind sir.
Yes, Fajar.
Can we start now, sir? I guess.
Yes, you can.
Okay. Meghna ma'am, we are starting, right? Meghna ma'am.
Start. Yeah,
Yes.
guys, please, yeah.
Thank you. Aryaman? Aryaman, you can start now.
Yes, sir.
Thanks a lot.
Good morning to all of you who have joined us virtually for the Investors Awareness Program by Professor Amogh Gothoskar, a program organized by the Faculty of Commerce and IQAC of RD National College, Bandra. It is a matter of great pride for me to invite our Vice Principal and Head of Department of Commerce, Ms. Lakshmi Iyer ma'am, to deliver the welcome address.
Good morning to you all. I'm indeed extremely happy to welcome you all on behalf of the Faculty of Commerce, on behalf of the Department of Commerce, and on behalf of the Department of Accountancy. I would really appreciate all the efforts taken by the Bombay Stock Exchange and our keynote speaker today, Mr. Amogh, who's going to talk about an investor awareness program. So thank you very much for this wonderful program, and we're going to be associated with Bombay Stock Exchange person, Professor Amogh, who's going to give us, with the stock market booming and with so much of nifty, so much of activity happening in the nifty and all around us, we need to understand where the investments have to be made. And remember, it's never too early to invest. So on behalf of the principal of the college, Dr. Neha Jagtiani, on behalf of the head of the Department of Accountancy, Dr. Meghna Chautalia, on behalf of my very dear colleagues, Professor Murli Rora, Mr. Kaizad Dada Chandji, and of course, our wonderful technical support given to us by Dr. Milind Kulkarni and all the other staff and students who made this program, who are going to really benefit from this program. So with these words, I would just want to hand over to the Master of Ceremony, Mr. Ariman. And what I would like to say is, please start investing right away. Even if it is a couple of rupees, start, learn, because here is where all the money is. So as students of commerce and accountancy, if you don't invest, who else is going to? So it's a very good platform. Start small, learn through trial and errors. I think you can also become a super king in this area. So with this, on behalf once again of the principal, on behalf of the head of the Department of Accountancy, Dr. Meghna Chautalia ma'am, Kaizad sir, Murli sir, Milind sir, and myself, Lakshmi Iyer, and I'd like to say, please take all the benefits you can from a wonderful program like this. Finance is the lifeblood of business. Without money, none of us can do any of things that we would ever want to do. And the best way, the smartest way, is through an investment awareness program. So thank you again, Professor Amogh, who is going to take us through an entire series of presentations on where to invest, how to invest, and how to become smart with our investments in the stock market. So with the money going up, I'm sure we'll all be able to be a little more successful in our investments from today. So with these array of investments, remember, it's always good not to put all your eggs in one basket. So you're going to have an entire range of investments, and you've got to diversify your investments, whether it's into fixed deposits, mutual funds, SIPs, stocks, whatever, and gold bonds, whether it's going to be real estate. So we're going to get you to actually understand where your money is worth putting in at this point of time. So with these few words, I'd hand over the mic to Ariman to take this program forward. Thank you very much.
Thank you so much, ma'am, for your warm welcome address. Now, I would request Kaizad sir to please say a few words.
All right. Thank you so much, Aryaman. Well, firstly, I would like to say a very big thank you to Professor Amogh for accepting our invitation. Sir, seriously, it's an honor to have you here. And my humble request to all the students to listen to Sir attentively. Believe me, you will learn a lot. I will not take much of your time, and I will now hand over the online platform to Professor Amogh. So, sir, it is all yours. Thank you so much. Have a great day ahead. Thanks, people.
Okay, thank you, Kezat sir. First of all, I'd like to thank the entire college management, specifically to Meghna ma'am and Kezat sir to coordinate for this event. And the introduction of the program has already been given absolutely correctly by Lakshmi ma'am, Vice Principal ma'am. And with this, I would just share my screen for the presentation that we'll be using today for the Investors Awareness Program. So 2-3 things before we begin is one is all of you kindly be on mute so that there's no disturbance during the session. And whatever questions you have, of course, we will be taking your questions at the end of the session. So at that time, probably till that time, rather, you can note it down or remember it so that at the end you could ask the respective questions. Also, one basic thing here is I would not be taking any questions during the session. I repeat, at the end, we are going to take all your questions. And please be on mute. But as you are on mute, I will also be asking you questions during the session. So you need to be active in the chat box. So our way of communicating during the session is the chat box, which is available in the Zoom app. So be active there. And as we move on, of course, I will be telling you a lot with regards to how to start, where to go, and so on and so forth. What is the process to be followed? So be active. And as I said, questions at the end. So to begin with, first of all, this is an investors awareness program. So probably the first question that probably many of you would have thought as students being participants is why is this program for us? Because technically we are not investors, we are students. So the first question, let us start from there, from scratch, is of course you are all students today, but ultimately at some point of time when you start earning money or when you get a job or when you start a business, whatever. So once you are done with your respective course, whichever you're doing, I believe most of you are BCom students. So after completing your graduation, many of you probably may go for a post-graduation also. And after that, you are going to become investors, because one important thing is, of course, you are going to earn money and you're also going to save money. But along with that, investing is also very, very important. Of course, during the session, I will be talking in detail about it, but that's basically my point to start off. Now, this program that we're doing is going to be an awareness session for you all on capital markets, and along with capital markets, many other aspects of investments also. And this is supported through the Bombay Stock Exchange Investors Protection Fund. So to begin with, my first question to all of you is, why are you studying? Today, you are all students, as I started off. So what is the reason or what is the objective for you all to study? I want your responses in the chat box. As I said, be on mute for the entire session, but be active in the chat box. So let me see your answers, your responses in the chat box. I repeat, my question is, why are you studying? What is the reason or what is the objective for you to study? Let me see your responses in the chat box. Okay, so we have some things. Please put it up to everyone. Don't put a direct message. To gain knowledge, to get a good job, to earn livelihood, to gain knowledge, to apply that knowledge and earn. Okay, any other answers? It is interesting. Okay, good. Anything else? Developing a better future to earn knowledge. Okay. Objective for you to study, for doing the respective course, for example, BCom that you're doing right now. Why are you doing it? What is the objective? Okay, I'll just wait for 10 more seconds for any other responses that are coming in. Okay. Fine. So the basic reason why you are studying is because you want to earn money, which is the primary aspect of all of us, the reason why we are doing our respective whatever courses, for example. So why do you want to earn money? Because ultimately we want knowledge, we want a job, we want some, you can say, experience and so on and so forth. Yes, agreed, absolutely correct. But ultimate reason is boss paisa kamana hai. Kyun paisa kamana hai is because we are going to have a lot of expenses that are going to arise, and these expenses are mostly of two main types. So the first one is going to be the same for everybody, is roti, kapda or makan. That is nothing else but food, clothing and shelter. This is common for everyone, all human beings, primary or basic needs. But on the other side, we are also going to have some other expenses, which in typical finance, we call it as financial goals of our life. So financial goals for you, let's say the students, probably will be something like, as I said, some of you may say, sir, I have to do a post-graduation. So for your post-graduation, you require money. If you're doing it immediately after graduation, maybe your parents are going to support you. But some of you may say, sir, I will first work and then I will do it. So of course you need money for that. Some may say, sir, मुझे शादी के लिए पैसा बचा के रखना है. Yes, that is also very important because marriage related expenses are also going to be there. Some may say, sir, I have to do some, let's say, trip, domestic, abroad, whatever. Some may say, sir, I have to save some money for my retirement, because retirement is also a very, very important aspect of our financial goals. And most importantly, and also unfortunately, this is the most neglected financial goal also. You may probably think, sir, abhi se aap retirement ke bare mein kyun bol rahe ho? Abhi to job bhi nahi lagi hai. We have not even started to work. But that's the exact reason this is the time to tell you, because we need to start as soon as possible, whenever, of course, you start earning, with planning for your retirement also. So all these are some examples of financial goals. Some may say, sir, I have to buy a car. Some may say I have to buy a mobile phone or some other electronic device. Some may say I have to support my parents. Okay, all these are different financial goals. As I said, they may change during your, you can say, life cycle, or maybe during your different stages of your life and so on and so forth. So that is why you are going to have these expenses. So now, one thing probably may come to your mind, sir, is this the only two things that are going to be there? That is, on one side, our income, that is earning, and on the other side, our expenses, that is spending. So along with these two, you are also going to do one more very important thing, which I told you at the beginning only, which is savings. But one thing that we need to understand here is, many a times what happens is, we tend to wait for our savings to be done at the end. That is, in short, you have your income. On other side, you say, whatever income I have got, I will spend it for my expenses. Okay, fine. But in this process, what happens is, we try to keep our savings at the end. And unfortunately, many a times we don't have anything actually left for our savings, because we have kept it as a secondary objective. So rather than doing this, it is better to change our mindset or our mentality. That is, rather than savings later, it is always better to start with savings once you get your income. Now, what is the advantage here is, as you are going to save at the beginning, or not even I would say save, but at least you keep some money aside for your savings, automatically you will have less amount of money left with you for your expenses, and which means that you will now only spend on things which are really, really necessary for you, which is, in short, a priority for you. And that is exactly why we should save first, or we should rather keep some money aside for savings, and then we should move to spending. And this is not only what I am trying to tell you. Warren Buffett, who is considered to be the modern day father of financial markets, who is also one of the youngest investors at the time when he actually started saving and investing, he also is saying the same thing. He says changing the mindset, changing the mentality is very, very important. Now, my second question here in this topic to you is, when I say that you should save, my question to you is, how much should you save? Assuming if you're earning, that is, assuming if your income is 100% from 100%, how much should you save? Give your answers in the chat box. Let us see. How much from 100% income should you be saving? Your answers to be in percentage. Okay, 40 to 45, 50, 30, 40. Okay, please be responsive in the chat box. Please be active in the chat box. Okay, so we have a lot of responses coming up. Okay, great. Okay, thank you for your responses. So on an average, what we have seen here is we've got a range of from 20% to approximately around 45 to 50%. And the correct answer is you should be saving at least 40%, 40. I repeat, you should be saving at least 40%. Now, a question probably may come from your side, sir, 40% is very high. I will not be able to save 40, no problem. You can start with 5, you can start with 10, you can start with 15, 20, whatever is possible for you at the beginning. I understand that there will be expenses, but this is the way how you are going to plan for your expenses by reducing the amount of money in your hand. And on the other side, also saving. So try to start and reach, ultimately your objective is to reach 40% as savings. Now, only saving, as I said, also is not going to be enough. So what is the reason actually why we are saving? So we are saving particularly because by saving, we will become something which is what our Prime Minister is also saying. Can anybody tell me, since last year, particularly when COVID started, somewhere in March 2020 in India, with lockdown and restrictions all coming up, what is our Prime Minister, Shri Narendra Modi ji, what is he talking about since last year continuously in his speeches? Can anybody tell me in the chat box? What is he talking about? Yeah, absolutely right, which is Atmanirbhar. Atmanirbhar Bharat is what he's talking about, which is a self-sufficient India. And that is exactly what we should also try to become on an individual level. But rather than calling it self-sufficient in finance, particularly from financial planning angle, we would call it as financial freedom, or also called as financial independence. In simple words, to become self-sufficient with regards to our needs or the expenses that are going to arise in the future. And as I said, for which the first step is to save. And after saving, you also need to proceed towards investing, because only saving is not going to create any wealth, which is ultimately what we are going to use for our future expenses or our needs. So when I say that you have to save 40%, if you save 40, the value of 40 is going to remain 40. It's not going to increase. So to make it increase, the next thing that you need to do after saving is to invest. But directly, we need not start with investments. We need to start with something else before we actually move to investments. And that something is typically what we have also tried to do as a child. Now, tell me in the chat box, how many of you have experienced something which was called as a piggy bank as a child? If you have experienced it, please type PB as in piggy bank, PB in the chat box, so that I know that as a child you have experienced a piggy bank. Let me see how many of you have gone through that experience, because what we are now going to talk about is something related to the piggy bank concept. Let me see how many of you have gone through that experience of a piggy bank when, of course, you were a small kid, a small child. Please type PB to confirm it. Let me see how many of you have gone through that experience. Okay, so I see a lot of you have gone through that experience. Okay, good. 5 more seconds. I'll just wait for your responses. Okay, great. So thank you once again for your response. Now is the question, why are we talking about piggy bank in today's lecture or today's session? So piggy bank as a concept was, first of all, given to us, or as a gifted to us, I would say, as a child by our elders. Why did they gift it to us? Is particularly because they wanted to inculcate a habit of saving in us. So as a child, of course, we did not have any income as such, but our income at that time was in the form of some blessings, which used to come in the form of currency notes or currency coins, which were gifted to us by our elders, maybe our grandparents, or maybe our uncle, aunt, relatives, elder brother, sister, maybe even our parents for that matter, on occasions, special occasions like a birthday or an anniversary or a marriage function, or maybe some, you can say, festivals and so on and so forth. So this money that we used to receive as a child, we were very much possessive about it. कि मुझे लगता था कि ये मेरा पैसा है, मैं किसी को नहीं दूंगा, ये मेरे पास ही रहेगा. And so to have that money kept somewhere, we were gifted with this piggy bank. So what did we do with that money is we used to put that money in that piggy bank, a small box with the face of a pig that we used to get, and we used to keep the money. The first feature was the money was always in cash. We never used to put checks there, because as we grew older, automatically we also started with our savings in the form of a bank account, which is a savings bank account, which was also opened for us by our parents or our elders. And then we started depositing money there. But as a small kid, we did not have that account. So what we used to do was the piggy bank, put the money in the cash form in the piggy bank. Next, as I said, we were quite possessive. So what we used to do was we used to usually try to hide that piggy bank somewhere. Some nook and corner of our house or our cupboard or our maybe table or something. Some nook and corner, particularly because we are possessive about it. And most importantly, ultimately, wherever we used to keep it, our parents or our elders used to know कि boss यहाँ पे उसने छुपा के रखा है. That's what our elders used to know. So now the same concept of a piggy bank that we were doing as a child, now as an elder or as an adult, we need to replicate that concept, but in a different way or a different form, which is called as an emergency fund. So planning for your emergencies or your contingencies is very important, because ultimately the word itself tells you that it can come anytime. Something like, let's say the prime example today, something like COVID. Who would have thought last year, maybe in the month of February or March 2020, who would have thought that we would have such a lot of restrictions, such a lot of, you can say, problems that were going to arise. Unfortunately, so many people lost jobs. So many people are working on salary cuts. Unfortunately, we may have lost some of our loved ones also. But all said and done, we have to still continue to live. That is, the show must go on. And for which, at such a time when such emergency strikes, it is always better that we have some saving specifically that we have kept for this time, and for which you should have an emergency fund. Now, what exactly do you do here is the same concept of a piggy bank. One, you keep that money in the form of cash and you keep it at home. And most importantly, from the theft angle, it is better to hide it somewhere, just like we used to do with the piggy bank. Whichever nook and corner of your house, some box, some cupboard, wherever you want, but try to avoid keeping that money in the form of cash in your locker, because that is the first place which the thief will go and check. So you keep some nook and corner dedicated for it. And most importantly, wherever you are keeping it, inform it to all your near and dear ones, including your family members and maybe some relatives or friends, whoever you trust. And that is how you will be able to use that money, or if not you, whoever is in the emergency from your family may be able to use that money whenever the emergency strikes. Now, the most important point here is the size. That is, how much should be the size of your emergency fund. So your emergency fund should typically be of a size of a minimum of 3 months of your income and a maximum of around 6 to 9 months of your income. So that is the typical size of your emergency fund. So I repeat, after saving money and before you start with investments, you should first keep some money aside for your emergencies. And as I said, try to use that money and keep it, most importantly, in the form of cash only. Don't invest it, because there could be a possibility that you may not even find time to actually go and withdraw that money or sell that investment and create liquidity for it. So it's better to keep it in the form of cash. So if you have understood this concept correctly of an emergency fund, kindly type EF as in emergency fund in the chat box, EF, so that I know that you have understood this concept. Not difficult to understand because you've already, most of you have gone through the experience of a piggy bank. So just a different way to relate piggy bank in the form of an emergency fund. So kindly confirm by typing EF as an emergency fund in the chat box so that I know that you've got it. And any questions, as I said, at the end, I will be giving you time. So any questions, of course, you can ask it at the end of the session. Till then, please confirm by typing EF in the chat box. Okay, thank you for your responses in the chat box. Others also, I assume, who have not typed it would have understood the concept. Now, the next thing that we need to understand is many a times what happens is you as an investor would be thinking about a lot of investments, but which investments, how you should go for it, and so on and so forth is probably some questions in your mind. So what you should do is, first of all, you should understand that there are two main types of investments, and these investments are going to offer you something in return. So what is that something? Is either in the form of interest or in the form of returns. Now, what is the difference? Interest is typically which is guaranteed in nature, whereas on the other side, when you talk about returns, they are not guaranteed. Now, what do you mean by not guaranteed? Is they could be positive also, which is a profit, or they could give you sometimes a loss also, which is a negative return. So you should be mentally prepared with regards to the risk associated to it. Risk of losing even sometimes your capital amount or making the value go down below the investment amount. So if you are mentally prepared for it, then slowly and gradually you will accept the risk, and slowly and gradually, as I said, you will go on with the investment. But of course, there are different types of investments and there are a lot of investments. But today I'm going to tell you about the most popular ones. So typically when I say interest is something which is usually guaranteed. But when I say usually guaranteed, also you should remember, as your vice principal ma'am, Ayer ma'am already pointed out, you should not keep your eggs, all your eggs, in one basket. In simple words, you should try to diversify your investment. So even when I say that there is interest being offered for something like fixed deposits, bonds, or debentures, I'm talking about three different investments. First of all, let's understand the difference. So when you save money and you invest your money in a bank, or you deposit your money in a bank, it is typically called as a fixed deposit. Similarly, when you invest your money in a public sector company, it is called as a bond. So public sector companies where the general public would be the majority owner or shareholder of that company. And similarly, when you invest your money in a private sector company, it is called as a debenture. So first difference is, where have you deposited or invested your money? I repeat, a bank is fixed deposit, public sector company is a bond, and private sector company is a debenture. Second thing that you need to understand is the risk. Out of the three products, low risk is in fixed deposits, medium risk is in bonds, and high risk is in debentures. And as the risk is high, to compensate for the risk, the interest offered is also high, and similarly vice versa. So low risk in fixed deposits, so the interest also will be low in fixed deposits. Medium risk in bonds, so the interest also will be medium, that is comparatively higher than fixed deposits in bonds. And the highest risk is in debentures, so the highest interest also will be there in debentures. That is risk. Understanding the risk appetite is very, very important, because everybody's risk appetite may be different. Some may say, I want to take low risk, medium risk, high risk, and so on and so forth. Now, someone may say, so all these three have interest, but remember to also diversify your investments in different, let's say, banks or different companies, and depending upon your own individual risk appetite. Now, some of you may say, sir, I want to take more risk than debentures. So the next product comes up, which is equity markets, or the product name as such is equity shares. Now, what are equity shares? So equity and share are typically two different words. Equity is typically the valuation or the capitalization of a company, and one small part of the valuation or the capitalization of that company is a share. So when you are buying one small part of the company's valuation or capitalization, we are calling it as an equity share. So depending on the overall value of the company and how many shares the company has issued, depending on that, the price of the share is decided. And it can be as low as something like ₹1, and it can go as high as thousands of rupees also. And depending, of course, later on the buying and selling of that share also, the price will go high or low. Or on the other side, relating to some events or happenings also, the price may go up or down. Now, please remember that the risk associated to this market is very, very high. So only if you are ready to take that risk, only then you should be proceeding for this investment. And if you decide to proceed, then you also need to open a specific account, or rather 2 accounts for doing the investment. And these accounts are typically your demat and a trading account. So demat account and a trading account can be opened with a broker or a sub-broker, typically who are members or sub-members of the stock exchange, something like a Bombay or a national stock exchange. And you open this account by giving your KYC documents, your form, your small photograph, which is passport size, and your address proof, PAN card, proof of identity, and so on and so forth. And once you open the account, demat account is typically used for keeping your securities in the electronic form, something like, let's say, bonds or debentures or equity shares in the electronic form in the demat account. And whereas the trading account is where your money is going to be, which is typically going to be linked further to your savings account, because from your savings account you can bring money into the trading, and similarly you can bring it back from trading to savings account. So that is how these 2 accounts are going to work. Please remember, the risk is pretty high here. Only if you want to take it up, proceed. Otherwise, look for alternatives. Now, when I say look for alternatives, some of you may have a question, sir. Okay, you've told us about bonds, debentures, equity shares, but I don't know, sir, which bond should I invest in, or which debenture should I invest in, or which share or which company share should I buy? I don't know. It's a question. Some may say, sir, before investing, should I study the market? Absolutely. You should always try to understand, analyze, study. And if you can't, ask experts. Take expert advice, recommendation, opinions, and only then proceed. So now a question will come, sir, I am not able to do it. I am not an expert. Okay, no problem. You may ask experts. Some may say, sir, experts will charge. I don't want to pay. Okay, fine. Some may say, sir, I can do the analysis, but I don't have the time. These are all general doubts or general questions that usually come to the investors or the general layman, the public. So in such a scenario, you can move to the next variety of investments, which is a mutual fund. Now, mutual fund is a process where you are going to deposit your money or invest your money in a mutual fund company, and further that money is going to go to an expert company, which is a AMC, that is an asset management company. And these asset management companies have fund managers who are the people who are going to answer your doubts in a way. Of course, not directly, but in a way. Which share to buy, which bond should I invest in, which debenture should I do? Of course, you are investing in a mutual fund, so it is an indirect investment done either in equities, bonds, debentures, and so on and so forth. But if you want to do it directly, as I said, you can definitely do it. But if you have those questions, then probably you should move towards mutual funds, because there are fund managers who are going to help you to answer, or rather to find answer to these questions. So mutual funds as such are of 3 main types. If you want your money to be going into equity shares or equity markets, then you should go for the first variety, which is equity mutual funds. Here the risk is going to be high. On the other side, if you want your investments to be comparatively low risk, that is to go into bonds or debentures or similar products, then you can go for debt or fixed income mutual funds. And third is a combination of the two. Some may say, I want both to be done. Then you can go for a balanced or hybrid, which is a combination of some money going into equity and balanced money probably going into products such as bonds and debentures. So here the risk is going to be medium. I repeat, high risk in equity mutual funds, low risk in debt or fixed income mutual funds, and medium risk in balanced or hybrid mutual funds. So once again, depending upon your own risk appetite, you should understand, you should find which or how much risk you want to take, and on the basis of that, then you may proceed for these investments. Now, a very important thing, some may ask me, sir, okay, fine, all these are traditional products. I want to invest in real estate properties. Should I go for it? Going for real estate property is also one of the types of investments, but there are some basic questions or basic doubts that you may have, or you should ask yourself before you do your investments in real estate. First is, am I going to use my own money for buying this property, or am I going to go for a borrowing, which is a loan? Because if you are not going to do investments from your savings, then probably you should ask yourself, is it really, really important for me to do a borrowing through a loan and go for this investment? Mind you, I am talking about real estate as an investment. If you are buying real estate property to live, that is, you are going to live there, actually live there every day, that is shelter as a basic need or a primary need. But here I'm not talking about real estate as shelter, as a primary need, but I'm talking about investment product. So investment, if you're going to do, then should you borrow, create a liability through a loan and go for it or not, is what you should ask yourself. I am nobody to tell you. You should ask yourself. One. Second is, if you think you should proceed, okay, fine. Next thing you should remember is, in real estate properties, the liquidity is comparatively low. In simple words, whenever you see and whenever you want your investments to be sold off, the time taken for it, that is the liquidity, is going to be high. You can sell it faster when you talk about all other products. For example, fixed deposits, bonds, debentures, equity shares, or mutual funds for that matter. But in real estates, the real estate property, sorry, it is going to be comparatively low. That is, the time taken for it to be sold off may be longer. And for which you should remember that your money may get locked into this property for that much period, for whatever time you're not being able to sell it off. That is also what you should remember. Also, that is the second point. Now, the third point is, whenever you are buying real estate properties for investments, don't keep it vacant. Try to give it on rent. But also, while giving it on rent, please remember to do a proper background analysis of the person to whom you are going to give it, because there are also frauds that he might just take it on rent and never leave. Could be possible. So it's better to do a background check. Next is, always do a proper leave and license agreement, which is registered, and stamp duty is also paid to the government authorities on it, so that if there is some problem that arises later on, you can always approach the legal system and you may find answers to your problems there. So that is what you should always remember. Also, if you want to do a direct investment, this is what you should be doing, as I just said. But if you want to do an indirect investment in real estate, you can also try to do investments through mutual funds, or you may also buy shares of real estate companies. So that is also what is possible for doing an indirect investment in real estate. I repeat, through buying something like, you can say, bonds, debentures, shares, or mutual funds related to real estate companies. So that is what also you can do. So that is basically what I wanted to tell you with regards to the products regarding investments, which is also called as financial assets. Asset, or simply a product. Anything which gives you interest or anything which may give you returns is what we call as assets. So if you have understood these products very correctly, please type asset, ASSET, in the chat box, so that I know that you have understood the concept of the products or the assets. Kindly confirm in the chat box by typing asset so that I know that you have understood this, and then we may proceed to the next topic. Okay, so I can see a lot of you typing asset, others also. I assume that you have understood it correctly. Thank you for your responses. Now, let's proceed. Now, once you are confirmed, once you know that you are going to invest, the next thing comes up is the factors that you should be analyzing during the investments. The first and the most important factor that you should analyze is the tax that you might have to pay on it. Because ultimately, when you are going to have any kind of interest or any kind of return, you also need to remember that you may have to pay a tax on it, because the interest or the positive return, which is profit, is your income. But before going there, I would like to tell you something about taxation. As BCom students, probably you might know about it also, but just let me throw some more light on it. So first of all, the tax that we have in India is called as the progressive taxation system. In simple words, higher the amount of income that you have, more is the tax that you would have to pay. So typically we have the financial year system in India, which is from 1st April till 31st March next year. So during this 12 months period, whatever income that you generate is typically, first of all, going to be a primary income on which the tax is going to be there. The primary income is something like salary if you have a job, professional income if you're a professional, or a business related income if you're an entrepreneur or a businessman or a woman. So that is what is the primary income. But along with this, you are also supposed to pay taxes on your investments. That is, in simple words, on the interest or on the positive return, that is profit that you might generate. So on the basis of the income, your slabs also go on changing with regards to the payment of tax. So for rupees 0 to 2.5 lakh rupees income, yearly income, you have to pay no tax. That is, it is exempted. From 2 lakh 50 to 5 lakhs, you have to pay 5%. From 5 lakhs to 10 lakhs, you have to pay 20%. And if it is 10 lakhs and above, you have to pay 30% tax. As I said, more the income, higher is the amount of tax. That is why it's called as the progressive taxation system. So whatever interest that you have earned in these 12 months, it is total, that is, it is added up, and the entire amount in this case would be called as income from other sources. And this income from other sources would be added to your primary income, which is salary, professional or business income. And according to the slab, as I just said, 5%, 20% or 30%, it is going to be taxed. On the other side, if you are getting some returns, that is positive returns, profit, only then you would have to pay a tax, which would be called as a capital gain tax. Capital gain in simple words is the profit. So if you have a loss or no profit, no loss, you don't have to pay anything. That is the first thing. So if you have a capital gain, that is a profit, it is further classified as short term or long term. So what is short term is if you sell your investment before 1 year and you get a profit, then it is short term. And in this case, you will have to pay a tax of 15%, 1/5, on the profit amount, that is on the capital gain amount, which is called as the short-term capital gain tax. On the other side, if you earn a profit, that is, if you sell your investment after 1 year till whatever n number of years, and you get a profit which is only up to 1 lakh rupees, then it is exempted. That is, you don't have to pay any long-term tax, that is capital gain tax on it. But if the long-term capital gain is more than 1 lakh rupees, then on whatever is the excess amount over and above 1 lakh, you have to pay 10% as your long-term capital gain tax. So I repeat, depending upon the type of your investment and depending upon the profit, short-term, long-term, whatever you have made, you will have to pay the respective taxes on it. So always remember to understand what kind of tax would probably come into picture and what is the amount that you might have to pay as tax, and only then proceed with regards to your investments. So that is about tax. So as a concept, as a topic, if you have understood this correctly, please type tax, that is TAX, in the chat box to confirm before we proceed to the next topic. just waiting for your responses in the chat box. Kindly confirm by typing tax so that I know that you've understood this correctly. If any doubts, as I said, please wait till the end so that you can ask your questions, your doubts. Please remember, please write it down so that you can ask it at the end of the session. Others also, I assume, have understood the concept correctly. Those who have typed it, thanks. If you have not typed it out, please ensure that you type it out so that I know you've got it. Now, along with tax as a concept, you should also be understanding some other things. The first thing is, as I already said, Lakshmi ma'am also has already pointed out, asset allocation, which is nothing else but, in simple words, trying to diversify your investments. In simple words, not to keep your eggs in one basket, because if the basket falls, all your eggs are going to be broken. In simple words, you may end up in losses if you put all your investments in the same product. So what is the best thing to do here is to diversify it, or rather spread it in a variety of investments. As I said, variety of asset classes, which is going to reduce the risk. Along with this, you should also try to check your cash flow position, which is simple words, cash inflow, which is your income, and cash outflow, which is your expense. Because on the basis of that only, you will be able to know how much you are going to save. And as I said, don't keep saving at the end, but change your mentality or your mindset and try to save first and then move towards your expenses so that you can plan your finances efficiently. Also, as I said, you also need to check what your financial goals are, because for everybody, as I said, the financial goals may be different. So understanding your financial goals is also very, very important. Along with that, as I said, liquidity is one point that you should understand, which we have already discussed in real estate. Taxability is what you should also know, which is what we have just discussed before this topic. Along with that, we should also be knowing about how or in which way can we invest. So the ease of doing the investment is in two main ways. First is you can do an investment one time, which is called as a lump sum investment, or alternatively, you can do your investments in installments also. Let us come back to mutual funds as a concept. So mutual funds, whenever you are going to invest, can be invested one time also, which is called as a lump sum investment, or alternatively, you may invest it in an installment also, which is popularly called as a SIP, that is a systematic investment plan, where rather than investing the entire amount at one go, you may be able to invest it in a monthly basis, on a monthly basis. And minimum amount here is only rupees 500. So always remember the advantage of going through the installment basis, which is called as a systematic investment plan, SIP or a SIP in mutual funds. The advantage is that rather than investing the entire amount, the cash outflow will be lesser in an SIP because you're investing in smaller amounts. Second, as you are going to invest at regular intervals of time, that is a monthly time or every month, the alternative for you is of investing at different prices. I repeat, the advantage is investing at different prices, which means that automatically you will be able to probably reduce your average cost at the end of the total investment period. So that is way important for you to know that you have both the mediums, either lump sum or through a SIP kind of an investment, which is an installment based investment. Along with this, you should also be knowing about transaction cost. So transaction cost in simple words is an additional expense that may arise whenever you are doing the investment. Examples can be something like a brokerage, something like commission or service charges. So at any point of time when you're doing the investment, there could be a possibility of having a transaction cost, brokerage, something like brokerage, commission or a service charge, which is going to add to the overall cost of your investment. So that is going to add to the overall cost. So you always need to be careful about it and try to understand if it is going to be involved. Now, many a times we try to do transactions which are legal, but also along with the legality of the transaction, remember to do transactions as far as possible which are regulated, because regulated transactions will have comparatively less risk because of comparatively higher rules and regulations or laws regarding the markets. Something like cryptocurrencies in today's world. Many people ask me during my sessions, during my question and answer sessions, sir, should we go for cryptocurrencies? Currently, if you really ask me, I would say no. Because cryptocurrencies as a concept, when they were actually launched in India way back, sometime back, they were illegal. But slowly and gradually now they have become legal, but still there is no regulator or official rules and regulations for it, which means they are unregulated products or unregulated investments. And which means there could be some problems that may arise with regards to the investments in cryptocurrencies. So my basic answer to you, if your question is about cryptocurrencies later on, is wait for some time, because the Indian government as such is planning to launch an official national cryptocurrency for the Indian markets. So wait till the time we actually come out with a regulated cryptocurrency approved by the Indian government, and then only you can move towards cryptocurrencies. But point being, legal and regulated products is what you should try to go for. Also, whenever you are investing, try to invest for a disciplined period or in a disciplined manner. In simple words, in, let's say, something like a monthly system. Some may say, I don't want to invest monthly. Some may say, I will do it daily. Some may say weekly. Some may say fortnightly, or some may say probably quarterly. So which one out of this? I've given you 5 examples now. Which one out of this is the best? Probably is a question. Please understand, whichever option you choose, whichever you decide, no problem. But please remain very, you can say, strict about following that. Don't suddenly jump from option A to B or B to C or C to D and so on and so forth. Try to stick to whichever monthly or quarterly or weekly or fortnightly, whichever option you decide out of the examples I gave, and try to do it, most importantly, for a longer period of time. Why longer period of time? Is because you get the advantage of compounding if you do it for a longer period. And what is compounding is, in simple words, getting interest not only on the principal amount, but also on the previous interest amounts. So for example, you have invested some amount, you get the first interest only on the principal amount. But when you get the second interest, you get it on the principal plus the first interest. Similarly, if you get the third interest, you get it on the principal plus the first and plus the second interest, and so on and so forth. So the value of your investments goes on increasing with the period of time, and that is why compounding is also called as the 8th wonder in the world in the field of finance, because it adds to the overall value of your investments. So don't forget to invest, and also while investing, to remember to check all of these perspectives, all these factors, and then only move for your investments, because understanding all the factors relating to the investment is very important. And that is why you should always do your analysis, do your study, and then only go forward. So if you have understood this concept correctly about asset allocation and all the factors relating to what I just said, kindly type AA as an asset allocation in the chat box, so that I know that you have understood it, and then we can proceed. Somebody's mic is on. Kindly please unmute it. Sorry, mute it. Okay, thanks a lot for typing in AA. Any doubts anyone has, as I said, we'll be taking your questions at the end. And now we are moving to the last topic, or the last part of today's session. So before I start and end this particular topic, I would now ask all of you to please start giving your attendance and feedback for the session, and for which I will be now sharing a Google form link with you all. So please ensure that you get your attendance and feedback filled up here in this link. I've just shared it in the chat box. So you may all start giving your feedback through this link, and which will also be indirectly your attendance for session. And please remember that you'll also be getting an e-certificate for participation in today's session, and that would be from the Bombay Stock Exchange Investors Protection Fund. So ensure that you fill up this particular form and fill up the information, so that you will also be eligible to get the certificate. So I will be also sharing the process to get it after our question and answers session. So please start filling this up. I repeat, you need to click on the form, the link that is given, and you need to give your feedback, which will also be considered as your attendance for the session. For the college, you have already been told by Kezad sir that you will be giving your roll number and your class. So that also you need to type in the chat box. But along with that, you will be filling up the feedback form so that you are eligible to get the certificates also. So please start filling this up. Till that time, I will go to the last topic and complete the topic. So the last thing that you need to understand is the precautions that you should be taking with regards to the investments that you do. So the precautions, the first and the most important precaution is if you are doing any transactions through any kind of intermediaries, let's say something like brokers or sub-brokers, you should always remember to do these transactions through registered intermediaries. So check their registration status, check their, you can say, registration numbers, their expiry periods, and so on and so forth. You can check it with the documents. Probably if they are giving it to you, you can check it there. Alternatively, you can check it on the exchange website, or alternatively also on the regulator's website. So for our capital markets in India, the regulator is the Securities and Exchange Board of India. So please ensure that you check these registration details. Also, whenever you do any kind of transactions, please remember that this transaction, you should get a receipt. And the receipt in the capital markets is typically called as a contract note. So this amount that you are going to receive through, or rather this transaction details that you're going to receive, will be through a receipt called as a contract note, which most of the times today is sent through an email, that is in the electronic form. So within 24 hours from doing the transaction, you should be getting this receipt. And if you're not getting this receipt, it is better that you ensure that you get it. So you may file a complaint, or alternatively, you can bring it to the notice of the respective party or the respective organization that you are not getting it, because getting it is your right as an investor. So always ensure that you are getting it. And if you are not satisfied, that is, if you are not getting it, then the best thing that you can do is you can file a complaint. That is, you can bring it to the notice of the organization. But even then they are not entertaining your complaint, then you can also approach the regulator directly. That is SEBI. So SEBI, that is Securities and Exchange Board of India, for complaint redressal has dedicated website and a mobile app, which is called as CORES, SCORES, which is full form SEBI Complaint Redressal System. So you can download this app, or you can visit their website, and you can file your complaints also by creating a profile, that is your username and password, and then submitting whatever your complaints are in the respective process. Also, as I said, is many a times we try to go for a transaction before knowing that product or before getting the details of the transaction. So always ensure that you have information regarding that. And information, we can find it very, very easily in today's world. So something like maybe print media, that is newspapers, magazines, periodicals, alternatively websites, or some may get information through word of mouth, through some friends, relatives, or maybe some other people around us. Or alternatively, we can use social media also. That is something like a Twitter or a LinkedIn, WhatsApp, Telegram, or Facebook, anything. So information is available. That's no problem. But many a times when we are taking decisions, that is investment decisions, based on this information, we should always ensure that this information, is it correct or not? That is the accuracy of this information, because it could still just be misinformation, which is a rumor. So before taking any call or any decision based on the information, verify it. And as I said, if you can't individually, then ask experts, take their advice, help, opinions, recommendations, and only then proceed. As far as possible, don't go to time the markets. Many a time we wait for the market. We say, market बढ़ रहा है ना, so I will wait for some time and then buy. Or market गिर रहा है, so I will wait and then sell, and so on and so forth. Whatever. But please understand, we are not a perfectionist, none of us. So better is, rather than timing the markets, better is to be cautious about it and try to find reasons. Why is it falling, rising, and so on and so forth. And once again, if you can't, ask experts, take help. Don't worry. They probably may even charge you, but then always be ready to take the risk if you don't have information. And most importantly, correct information. And only if you are knowing that you are ready to take the risk, only then you should proceed. Because please remember, wherever you see high returns, high profit, high interest, immediately a bell should ring in your mind that yes, there is also a high risk involved in this. And only if you want to take it up, then only you should proceed. Also, as I said, don't try to do any transactions in cash in the capital markets because it is illegal. It is banned. So try doing transactions in the traditional form, that is something like a check or a demand draft, or even the newer mediums that we have today, something like an NEFT or an RTGS or a UPI for that matter, or an ACH. So whichever medium you are comfortable and whichever medium is available, use that and do your transactions. And most importantly, as I said, try to go for legal means and regulated products. And last but not the least, along with all this, also don't forget to learn from others' experiences, because others' experiences may also help us in our own investment decision-making process. So not only you should be learning from others, but you should also be trying to share your experiences with others so that it is a profitable, you can say, give and take of experiences. And like we learn from others, or we may learn from others, similarly, others also may probably learn from our mistakes or our experiences. So this was all that I wanted to tell you through this session on Investors Awareness Program, which was a capital market awareness initiative of the Bombay Stock Exchange Investors Protection Fund. So I hope that whatever information I tried to share today in this session would have helped you to gain some quality knowledge with regards to investments, investment process, and so on and so forth. And you would definitely use this information further down whenever you start with your investment journey, and which would help you to probably become successful investors and of course prosperous investors as well. So thank you once again. I would like to thank the entire college management, principal, vice principal, Meghna ma'am, Kezad sir, for all taking the initiative, the technical staff, and of course you all the students for having this event done in a successful manner. So now I would just remind once again all of you to give your feedback through the Google link, the Google form link. Once again, I'll share it in the chat box, and also type your name, your roll number and your class in the chat box so that both the things are done successfully. So now I hand it over to Kezad sir, or probably the speaker who was the host of the session. Aryaman, if I'm not wrong.
Sir, Amogh sir, are we open for question answers?
Yes, that's what I was just coming to.
Yeah. So students, if you have any questions, you can either type in the chat box or you raise your hands. We shall unmute you.
Kindly ensure all of you also that you fill up the feedback form, because that is how you'll be getting the certificates for attending the session. Currently, I can see only 45 have filled up the feedback form. So all of you, please ensure that you fill it up immediately, because after some time, the link will get deactivated. So before that, you need to fill it up so that you don't find any problems later on to get your e-certificates for participation. The process for which I will be sharing after we complete the question and answers. So any questions, please feel free to ask your questions, your doubts relating to the session. Any one of you.
Amogh sir, there is a question from Amya Shinoy. He is saying, what is the ideal time to invest?
Can you be a bit specific? The student who has asked it.
Amya, you can unmute you. Amya, just a sec, I'll unmute you.
Hello, yes, sir. So what is
Yeah.
the ideal time to invest?
Time as in I didn't get you. Are you asking about age?
Yes, sir. Like what is the ideal time?
I repeat my question here. Are you time as in, are you asking about age?
Yes, sir.
So age is basically any time when you can save some money from your income and you can start with investments. And the simplest way to start off is by doing something like a small SIP where of mutual funds, of course, where, as I said, minimum amount is going to be 500 rupees per month. So you may even start at this time when you are studying. And of course, let's say your income today is in the form of some pocket money. So if you can save some pocket money, for example, 500 per month also, for example, if you can start off, you may go for mutual funds, something like an equity or a debt or a balanced one. Of course, as I said, depending upon your own individual risk appetite. Any other questions?
Thank you, sir.
Students, you can unmute yourself or you can type in the chat box. Any more questions, please?
Anyone? Any questions?
Amogh sir, there is a question from Kajal. She is saying, as a long-term investment, for how many years would it be better to keep investing? I mean, she's talking from return perspective.
Yeah. See, generally, when you talk about investments, it is always better to go for a long-term investment, as I already said. But all said and done, you may also go for a short-term investment, which will be something like, let's say, 3 months, 6 months, or alternatively, you can go for long-term investments, medium-term investments. But if you really ask me, when you are a new investor, it's always better to plan first for your long-term, which will be something like more than 5 years, or maybe something like 3 to 5 years, or more than 5 years. And medium-term investment will be something like 1 to 3 years, and anything less than 1 year would be a short-term investment. So I repeat, first start planning for your long-term investments, then come down to, let's say, medium-term, and then come down to short-term investments. That's how you can start planning as a new investor in the markets.
Amogh sir, there's one more question from Khwaja. He's saying that, is it advisable to avail services of brokers?
See, first of all, when you're talking about equity shares, you cannot do it directly. You have to go through a broker or a sub-broker. In mutual funds, there is an option available where you can do a direct investment also without brokers, that is without distributors. But in that case, then you would be needed to have that expertise to decide which company, which scheme, which type of fund should you be going for. So if you feel you have that expertise, then probably you can go without brokers or without advisors or without distributors also, in short, without intermediaries. And if you don't feel that you have that expertise, then probably then it makes sense to probably go for a distributor or an advisor as an intermediary for your investments. Any other questions, anybody? I remind all of you to please ensure that you fill up your attendance and your feedback. The Google form for which is already shared in the chat box. I can still see only 47 of you have filled up the feedback. And I repeat that you will not be able to get your e-certificates from the Bombay Stock Exchange if you don't fill up the feedback. So please ensure that you fill it up, because the link will get deactivated in some time. And later on, I will not be able to help you out with that. Any other questions, anyone? Kezat sir, I think no questions.
Yes, sir, I think.
So shall I now proceed to the process of the certificates?
Yes, sir.
Yeah. You also please, sir, note it down so you can help out the students.
Yes, sir.
Now, tomorrow, all of you have to go to this website tomorrow at 5 p.m. I repeat, you have to go to this website The first line you can see, I'll just type it out in the chat box. So this is the website. I've just typed it out in the chat box also. So once you go to this website, I repeat, tomorrow at 5 p.m. in the evening, you have to go to this website, not now, not after the session today, tomorrow at 5 p.m. So once you go to this website, this is the home page that will open up. The home page would look like this. And on the right hand top side here, you will see sign up. So you have to click on sign up. I repeat, on the right hand top side, you will see sign up here. You just have to click on it. So once you click on sign up, this is the box that will open up. So in the box, you will have to enter your details. I repeat, the name, mobile number, email address should be the same that you have entered today in the feedback form, because that is going to be verified. So please ensure that you fill up the feedback form today, because tomorrow you will not get the certificates if the information does not match or is not available in the feedback form. That's why I've been telling you, please don't forget to fill it up immediately before it gets deactivated. Below that, select program. You have to select Investor Awareness Program. In name of institute, your college name will appear there tomorrow at 5 p.m. It will not appear now if you visit the website. So tomorrow 5 p.m. you have to do this procedure. Select the name of your college there. In select stream, you have to select BCom. I repeat, in select stream, you have to select BCom. Not BSc IPF, select BCom. If BCom is not available, then you have to select as a backup BSc IPF. So I repeat, first option is selecting BCom in the stream. If BCom is not available, then BSc IPF. Below that, the state and the city, you don't have to enter anything. It will automatically get updated once you select the name of your college from name of institute. And last is the code. So the code is going to be today's date in DDMMYYYY format. I repeat, the code is going to be today's date in DDMMYYYY format. So today's date is 8th of September. So the code is 08092021. I'm just typing it out in the chat box as well, just for your information. 08092021 is the code for the session. And once you fill up that, below that, you have to click on sign up here. And once you click on sign up, your information will be verified through the feedback form. And if everything matches correctly, then you will receive directly on your email address the e-certificate of participation for today's program. And please ensure that you fill up all the details correctly today in the feedback form, as well as tomorrow through this procedure at 5 p.m. that you need to do through the website that I've shared with you. So I hope that all of you have noted all these things correctly. And as I said, you will now be doing this procedure tomorrow at 5 p.m. But today, ensure that you fill up the feedback form correctly, so that the information matches tomorrow and you will be eligible to get the certificates. So thanks a lot once again from my side. First of all, to the college management, principal, vice principal, Meghna ma'am, Kezad sir, technical staff, and of course you all the students for participating in this today's event. And thank you once again.
Thank you, sir.
Having this initiative.
Yeah. Sharon?
Yes, sir. I
Yeah.
request everyone to switch on the camera for a photograph.
Yeah, Sharon, you can now start.
I, Sharon Janetta of S.W.A BCom, would like to propose a vote of thanks. I would like to thank Professor Amogh Gothoskar for this informative session. Thank you, sir, for giving us your valuable time. Thank you, sir, for giving us a valuable time. We had learned a lot and would apply the financial principles in a day-to-day life. We look forward to apply. We look forward We look forward to a long-term association with you, sir. A very big thank to our principal, Dr. Meghna, Dr. Neha, Jagtiani ma'am, for a constant support and motivation. Our vice principals, Ms. Lakshmi Iyer ma'am and Dinesh Himmat Singhani sir. We are also thankful to our head and convener of this event, Dr. Meghna Chotalia ma'am, without whose effort this event would have not been possible. I also thank Dr. Milind Kulkarni sir for being our technical head for all the sessions and workshops. I would also like to thank our fellow participants for attending the session, for being a great audience. Thanks to all once again.
Thank you so much. Thank you all the students for attending. Thank you so much, Amogh sir, for this wonderful session.
Yeah, thanks a lot once again. Thank you, all of you. Take care, stay safe, and stay healthy.
Thank you, sir.
Thank you, Amogh sir. Thank you so much. Thank you,
Yes, sir.
Faizaz.
Thank you,
Thank
sir.
you. Thank you, Milind sir. Thank you.
Thank you.
Faizaz sir.
Yes, ma'am. Yes, ma'am.
Thank you, Lakshmi ma'am.
Thank you, ma'am.
Faizaz sir.
Yes, ma'am. Yes, ma'am.
Milind sir.
Yes, ma'am.
Yes, ma'am.
Request everyone to turn on their cameras for a quick photograph.
We can do that. Yeah, students, you can just switch on your cameras. Yeah, ma'am, you're done.
Thank you.
Thank you, ma'am.
Faizaz sir, can I end?
Yes, sir. Yes, sir. Amogh sir, thanks a lot, sir.
Thank
Thank
you,
you.
sir.
Thank
Sure,
you.
thank you.
Yeah, thank you all. Thanks, students. Thank you, Milind sir. Thank you,
Thank you all. Thank you. Thank you. Thank you, Amogh sir. Thank you so much. I'm ending
Yes,
this
sir.
session.
Yes, sir. Yes, sir. Thank you.
Okay. Thank you. Thank you. Nice session.